Well, hello, everyone. This is John Thomas, the Mad Hedge Fund Trader, and I only give presentations when the Dow is up 1,000 points. So today is your lucky day because the Dow is actually up 1,008 points. So anyway, this is John Thomas, the Mad Hedge Fund Trader. I'm going to talk about the big plays for 2023, things you should be buying on every dip or selling short on every rally for the rest of the year. The timing of this presentation is particularly good because all of the major asset classes are about to reverse multi-year trends, and it is a great time to add new trends. And by the way, I'm broadcasting from Silicon Valley, which is basically a giant wake right now because there have been something like 20,000 layoffs this week. So let's get on with the show. Take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I am in the early retirement business. Your early retirement. Why listen to me? Well, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, little brief timeout as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 14 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern industry who is still working. So let's go flying for a minute. All right, that was me flying. The RAF has 2 Spitfires left over from the Battle of Britain. That was one of them, and I was in a mock dogfight over the English Channel. Turns out the RAF wanted to see if I really was a fighter pilot, and only one way to prove it. The other reason to listen to the presentation is we have a trailing 1-year return of 75.53% versus down 16.76% for the S&P 500. We did a lot of that on the short side this year, especially early in the year, shorting the big tech stocks and also being short the bond market. The first year ever where being short both bonds and stocks made tons of money. So if you want to see how we did this, listen on. So if you're going to listen to me for the next hour, who is John Thomas? Well, my family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. There wasn't much to do in rural California in those days but hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I wasn't long before I found the stock pages, bought IBM at 20, sold it at 30, suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions where I learned how to fly and jump out of perfectly good airplanes. There I advised the allies, America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And all I got for 10 years of government service is this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry joining Morgan Stanley. After 10 years there, I started my own hedge fund. And there is my original Morgan Stanley ID card from 1983. And yes, the years have been cruel. And that's me losing the All Japan Karate Championships. I never enter a karate final with a broken wrist, which I did. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like buy the latest hot car, collect vintage Rolls Royces, fly your own private plane, and go marlin fishing in Mexico. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I now spend my days pursuing my first love, which is finding winning trade alerts. But I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more job satisfaction, leveling the playing field for the average guy and teaching them how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could get anywhere else. However, every silver lining has a cloud. In 2020, I had to pay $8.2 million in taxes on $20 million in trading income. Ouch, I just thank goodness that I can make that payment to Uncle Sam and not cut back my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. Ultimate luxury, of course, is to give those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When wildfires hit California, I visited main evacuation centers and handed out $10,000 worth of Target gift cards. And there you can see I'm visiting my in-laws' house. There's a SIF box where they were looking for a wedding ring, which they eventually found because it was made out of platinum. Platinum has a far higher melting point than gold. And that's one of the little tidbits you learn trading commodities for 50 years. So there is a method to my madness. We're now in a trader's paradise. Bear market is now in full force, taking out the double bottom, but we only got a marginal new low of 800 Dow points in 4 months, meaning the end is approaching. We are now 9 months into a 12 to 15 month bear market. A major trading rally launched with the onset of Q4 and the passing of the midterm elections. And we may be discounting the end of interest rate rises as early as December. US dollar has peaked with 10-year bonds bottoming at a 4.46% yield. Q4 could be the best entry point for stocks in a decade. Time to look at those leaps. And we do offer all leaps portfolios for our concierge clients. Oil prices just suffered a 40% fall and will decline further in a recession. Inflation is plunging, dropping a full 1% this morning to a 7.7% inflation rate year on year. Gold is bottom, and we'll see a major bull market begin next year. Global economy is unstable at the least. We've just got a 75 basis point rate hike, and we'll get another one in December, followed by 50 basis points, then 25 basis points, and then falling interest rates for 5 years. All points to a mild recession in 2023, followed by a new bull market in stocks. Consumer sentiment is at a record low. 2021 GDP was revised up from 5.7 to 5.9. The post-COVID recovery was much stronger than expected. Money supply is in free fall, showing the sharpest 5-month decline in M2 in history. We literally went from a 30% growth rate to a negative growth rate year on year. And if you think inflation is bad here, it's worse in Europe, where it's at 9.6%. Yes, prices are higher on the continent than here because they have to pay an ever more expensive dollars for their imports, as well as premium prices for marginal energy. Some power bills in Europe are up 500% in a year. Stocks crawled back from the dead. All the negatives have gone. Seasonals, earnings reports, strong dollar, and now the election. Put call spread is the biggest in history, about 1 to 4, showing that investors are piling in, or at least covering their shorts as fast as they can. Stock buybacks will hit a total of $1.25 trillion in 2022. Yes, companies are smart. They like buying their stocks when they are cheap. Old value industrials have been the overwhelmingly trouncing big tech. Banks are leading on the up day, suggesting they may be the new lead sector in a rising market. The golden age of banking is just beginning. No surprise that investors sold what was expensive, tech stocks, and are buying what are cheap, banks. It's basic investing 101. In fact, the value of tech is more than double the value of banks. Tech is still trading at a big premium to the market and double the price earnings multiples of banks. Look for a terrible first half, strong second half scenario to continue. So this is the bull case going forward. This is what's in the market right now. High inflation, oil shock, COVID spike, labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. This is what stocks will discount next. Plunging gas prices, plunging commodity prices, stabilizing supply chain, record low unemployment, better than expected earnings, 1.25 trillion in stock buybacks, soon to fall interest rates, and a weak dollar. This all sets up a massive bull market, which will continue for the rest of the decade. This is our short-term market timing algorithm, and it operates at about a 95% accuracy rate. And it shows that we hit the bottom in this bull market at 350. We were overdue for a 17% rally, which we're getting, which really started weeks ago and is continuing today. We look for an interim top in the S&P 500 at 410 for the SPYs. And then we may go back down one more time to test again, see if that low was a good low. And then after that, it's up for 10 years. So the barbell portfolio is what we run. Half of that is in big tech, where you have 2% of the workforce creating 27% of the market cap and 38% of U.S. earnings. The other half is domestic recovery, including railroads, airlines, cruise lines, couriers, steel companies, banks, commodities, construction, credit card companies, hotels, casinos, and online ticket sales. Boeing has just had a tremendous month, up about 30%, reaching short-term resistance. We think the bottom is in. This qualifies as a long-term double bottom here, and the longer the double bottom, the longer it goes up. We're targeting $250 in 2023 for Boeing. JP Morgan, also major move underway that will continue. We're looking for $200 a share in 2023 for JP Morgan. Banks love rising interest rates, falling default rates, and are hugely overcapitalized. Visa is another financial play. One way to capture inflation is to buy credit card companies because they automatically benefit with the higher fees from higher prices. And right now, we're seeing the fastest sales growth for Visa in history. We're looking for $300 a share in 2023. Union Pacific, any economic recovery, you have to move a lot of big stuff. No one is better at that than railroads. Union Pacific is the largest railroad in the U.S. And it's also a play on the recovery of China because Union Pacific is the predominant east-west railroad. So you're moving commodities out to China and manufacturing goods back in from China, especially clothes, electronics. Looking for $300 in Union Pacific. Federal Express, you also move a lot of small stuff overnight. The stock just got hammered on an earnings disappointment, putting in a bottom now. We're looking for $300 a share in Federal Express. That's a double from here next year. Berkshire Hathaway is your one-stop barbell portfolio. They're the largest outside owner of Apple, and they have major exposure to banks. We're targeting $400 a share in Berkshire, or about 35% from here in 2023. Second half of the barbell bets on a massive global recovery to begin in 2023. Upside potential for recovery stocks upside potential for recovery stocks in 2023 is far greater than it is for tech. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology. We could spend all of the next 2 years flip-flopping back and forth between these two groups. So of course, NASDAQ is the bellwether for tech stocks. We've been playing it mostly on the short side this year, selling every rally and buying the big dips. We're looking for NASDAQ to recover to at least the 13,000 high in 2023. That's up substantially from here. Microsoft looking for $320 a share in 2023. And the big question on when tech stocks will move is when the Fed starts to cut interest rates. That could be in as soon as 6 months. So the basic idea here is you go long your domestic stocks and financials now, and then you go back into tech in about 6 months when we start getting these big interest rate declines and also a falling US dollar. All of the big techs have major exposure to international sales. Those have been shrinking dramatically all year as the currencies hit 20-year lows. That all reverses in 2023. Weak dollar, strong foreign currencies mean you get ballistic growth in technology earnings next year just from the weak dollar. Apple is another one of these. Again, trying to put in a double bottom here. We still have 1 billion iPhones that need to be upgraded so they can use 5G. we're targeting $200 a share for Apple, up from $137 today. Amazon, also, we're looking for a potential double in shares next year, making it the first $3 trillion company. Again, earnings disappointment, slowing Christmas prospects have absolutely hammered the stock. Plus, they had their 20-to-1 split. So we're targeting 185 for Amazon, up from 89. And Alphabet is another potential winner for us. They have 92% share of all search, and 15% of all search is for travel, which is booming right now. We think Alphabet could hit 150 next year, up from 88 today. And what's the first thing you cancel going into a recession? Advertising. What's the first thing you buy back on a recovery? Advertising. You want to start picking up all of these advertising plays after they've been completely slaughtered this year. So another great upside opportunity for Google. Salesforce, also major exposure to international earnings, which dropped 20% just on the currency this year. Looking for a potential double in Salesforce, also targeting $250 a share, up from $140 now. So what is the big trade of 2023? Well, amazingly, it's not going to be a stock. It's going to be in bonds. We hit 4.46 yield a couple weeks ago. That is going to be the best trade of 2023, buying bonds on a leverage basis. And you can get bonds with leverage of 10 or 20 to 1. With the TLT down 48% in 2.5 years, bond longs will be the big trade of 2023. 30% of upside is within easy reach. If you use any kind of leverage, you can make that into 300 or 400%. We actually have several 400% returning trades for 2023 in the bond area through LEAPs or long-term equity participation securities, which you can buy in the options market. Fed will raise interest rates too far too fast, and then lower rates too far too fast, as has been their pattern for the last 10 years. Apply those losses to $150 trillion global bond market, and something like $67 trillion was lost this year. Much of that will be made back next year. Anybody who used leverage in the bond market is now gone. What does that mean? It's time to start adding leverage in the bond market. Do the opposite of what the losers have been doing. And we find out how many investors have been swimming without a swimsuit when the tide goes out. U.S. Treasury bond fund plunged from 180 to 92. We were short the entire way. We started shorting bonds at 180, and we rode it all the way down to 92. And we had many people following us this year who earned more than 100% returns just by concentrating in short bond plays. Government loves inflation, even if you hate it, for the purchasing power of bonds issued now is shrinking at a 7.7% annual rate. Yes, government can borrow like crazy because in the end of the day, it always goes to money heaven. The purchasing power of the government bonds drops by about 90% by the end of their 30-year life. So with a long trade setting up now, and bonds were up 3 points this morning, we can see the yield go from a 4.46% from weeks ago on its way down to 2.5%. That means there's a hell of a lot of money to be made buying bonds right here. So here's the TLT. That's the end of our short play here. We think now you need to buy bonds and write them at least up to 120. And with leverage that 20% or 25% return can easily be made into 250 or even 400%. And here's the yield. We think the yield's peaked out at 446. We're going down to 250. So major upside move in bonds is just beginning to unfold. Foreign currencies, we think the dollar has peaked. Sharply falling interest rates will bring a crashing US dollar. All foreign currencies will rally strongly. Oops. Let me unplug this. Goodbye phone.
Call from spam name.
Yeah, and it's of course it's a spam call that I'm getting. Weak Chinese economy will keep the yuan relatively weak as long as pandemic lockdowns continue. Strong currencies will also deliver a major bull market in emerging market stocks, which you can get through the EEM for the stock markets and the CEW for emerging market currencies. You can kind of look for a 40% increase in emerging market currencies next year. So what are the best ways to play a collapsing dollar? Well, how about the Australian dollar? Major long-term bottom is in. The next move for the Aussie will be from 62 to 1-to-1. That is about a 60% potential gain in the Australian dollar. And this will go on for years. This is not just a one-hit wonder. So buy Aussie on dips. You also want to buy the Japanese yen, the weakest foreign currency this year. That's because the Bank of Japan refused to raise interest rates. And you want to buy the euro. Not only is the US going to be cutting its interest rate sharply, but a Russian defeat in the Ukraine war is likely in 2023, and that will also lead to a major recovery in the euro. We're looking for a 25% gain in the euro next year. So if you think about buying a second home in Paris or Florence, now is the time to do it because it will gain 25% just on the currencies. British pound will recover, but not as much as the other because they have a major drag with Brexit. Uncoupling from the European economy will be a disaster for Britain, and I expect a long-term decline in British standards of living by about half because of Brexit. But even the pound will recover, and by the way, that's the new British pound with King Charles III on there, which just came out last week. Emerging market currencies. Yeah, you could get a 40% return on emerging currencies. They have been the most beaten up foreign currency category in the world for the last 3 years. Going forward, they will be the best performer on the upside. Energy and commodities. If you're looking for a recession, you don't want to be anywhere near oil. It could drop a lot. And I mean a whole lot from here. 60 ships are now offshore in Europe waiting to unload. They can't because they don't have the facilities to unload so much natural gas. And the shipping companies are having to pay $500,000 a day per ship in what they call demurrage, which is ships tied up on leases but aren't being used. Biden attacks the oil companies on price gouging, proposes a windfall profit tax, which may actually get if the Democrats get control of Congress. Russia loses the ability to ensure oil cargoes by year end. Germany is fighting the energy cutoff from Russia by reviving their coal industry for the next couple of years. Void all energy plays like the plague. It's the new buggy whip industry as the U.S. decarbonizes. And all of the energy stocks are peaking out right around here. I'm not recommending energy because there is no long-term growth story. Who wants to make a 30-year investment in energy if it's going to go out of use in 10 years? That is why oil companies will not increase drilling. All of their past business plans were based on 30-year investments, and that they are not making themselves. Here's oil. We've already hit the $132 a barrel peak all the way back in February with the Russian invasion. Eventually, we go down to $10 a barrel. 50% of the use of oil in the United States is for transportation. That will be illegal in 10 years in many U.S. states where sale of gasoline engines are banned. So there is no great long-term play here. The time to buy oil is when it was negative 37 2.5 years ago, which is where the futures traded down to at the pandemic low. And this is one of the greatest double tops of all time. We peaked in 2008 at $150 a barrel, made it up to 132 in February. We're going back down to test these old lows at around $10. And too many other better trades to do, like buying technology stocks down 70 or 80%, buying bonds down 48%, and selling the dollar at 20-year highs. By the way, we also get a new bull market in gold. I know a lot of you gold bugs have been sitting on your hands for years. Your time to shine will be 2023. Collapsing interest rates next year will be the big story. Destruction of crypto is bringing back gold as a non-correlated asset. Gold is more of a commodity play now than a risk hedge. Recently, rising interest rates delivered a terrible 2022 for gold and a great 2023. Silver is still the bigger and better play. You can expect silver to go up twice as fast as gold, as it usually does, except this time you have absolutely gigantic demand from electric vehicles and solar panels. So we're looking for a 30% move in gold from the current levels, and actually we already got the first 2% of that today. I just checked the gold price this morning, and it's at $17.10. So we're up $30 or 2% just this morning. And we're looking for $2,200 an ounce in gold by the end of next year. Barrick Gold is the world's largest gold miners. We think we could hit $50 next year, possible triple there. And silver will also do as well. It'll go from $19 to $50, up 220% next year. So major buying opportunity, options play, and leads play all in silver. So don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these stocks change every day. They're all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out, as many people did this year. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me sending out a trade alert from the coast of North Africa. I'm struggling as hard as I can to smile because it's 120 degrees in that picture. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct trading and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easiest solution to that is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. And in a market that goes up 80% of the time, that's a great skill to have. This is the last broker I talked to. I ran into him in Northern Italy. His name was Pinocchio. You need a real pro to guide you through the market maze. The market is not monolithic. 95% of it can be completely ignored. There are a few great sectors out there and a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is my secret weapon, the Mad Hedge Profit Predictor. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took 1,000 hours of calculations by a team of mathematicians to create this, and it's worth its weight in gold. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algos have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day like this one. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And I'm not the only one using algorithms. I was walking on the waterfront in Miami a few years ago, and I saw this mega yacht, and look what it's called, algorithm. Obviously, it's working for more than just me. This is 3 years of algo performance, and you can see we get lots of buys at market bottoms, sells at market tops, buy, sell, buy, sell. It's like owning a printing press for $100 bills. 49.51% is our average annualized return for the last 14 years. That is 2.86 times the S&P 500. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $1.5 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, a Tesla Powerwalls, and a Tesla Model 3, and still had enough money to send 3 kids to college. And here is another testimonial from one of our followers.
This is Bob. I live in Colorado and hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right. And by the way, we get these in almost every week, these kinds of testimonials. So what do we do about all this? Well, stocks, you want to buy the next crash or the next major dip. Bonds, you want to buy dips. Commodities, buy dips. Energy, stand aside. Foreign currencies, buy the next currency dip. Precious metals, buy dips. So yeah, it's a complete reversal of what we had this year. So if you're not up 75.73% in the past 12 months as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 75.53% trailing 1 year return, and that is daily audited. 49.51% average annualized return. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite on the Queen Mary from New York to London. When you get to London, you can then take the Orient Express to Venice. Warning, every dinner is black tie, so I bring an extra tux for that part of the trip. And when you get to Venice, you can go island hopping by helicopter. Saves a heck of a lot of time. This is the very long view and where the big money will be really made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become the next big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That'll create an economic boom that could last another decade, starting in 2023. And that's me watching climbers come down from the Matterhorn from my chalet in Switzerland. And this has all happened before. From 1982 to 2000, the Dow average went up 20 times in 18 years. Are you ready for a replay? This is what happened the last time we had a demographic tail end like the one that's starting right now. So if we get that same trend, assuming the bottom was in 2009, that means if we get a 20 times return from the 2009 bottom, that takes us up to Dow 120,000 by 2030. And if you think this is impossible, we are in fact already 2/3 of the way there. We're actually here right now on a relative basis, assuming we get the same price movement that we did from 83 to 2000. Except this time it's different. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will be shortly solved, like weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who'll show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 75.53% in a year. Follow my research and market-beating trade alerts, and you will rake the profits in. Let Marine combat pilots steer you to big trading profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trade history for a month for us. You can see we bought the S&P 500, made 16%, sold short treasuries, made 8%, bought the Russell, bought Amazon, bought Apple, bought Biogen, but then stopped out very quickly. We always stop out of losers very fast. It's easier to dig yourself out of a small hole than a big hole. And we bought Palo Alto Networks, shorted the yen, shorted treasuries again, bought the SPYs, and bought gold. Just a matter of time before barbell stocks break out to new all-time highs. Watch this space going up into the end of 2023. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how our service works. Our algorithm predicted an imminent upside breakout in Tesla a few years ago. So we sent out a trade alert like this. It said buy Tesla at 67 or best. It was an opening trade, portfolio weighting 10%. That meant you had to buy 149 shares for a $10,000 exposure in Tesla. What happened? Well, it went up 63% in 20 trading days. So did we just sit around and pat ourselves on the back? No, we sent out a trade alert. It said take profits. Sell Tesla at 109 or best. And on this particular trade, we made $6,258 in only 20 trading days. Did we give up on Tesla after that? No, we kept buying every dip, bought it here, bought it here, bought it here. And in fact, we chased it up to a split adjusted price of $400. So this is a record of our 10 baggers that we had last year. Zoom, we got a 10 times return, buying it at 60. Lam Research, we got a 10.6 times return. NVIDIA, we got a 16 times return on that one. Square, we got a 25 times return. Moderna, we bought before the pandemic, got a 40 times return on that. And of course, Tesla, the granddaddy of them all, up 400 times from our original cost of $2. So with my Mad Hedge Global Trading Dispatch service, you get instant trade alerts sent out at market sweet spots, about 200 of them a year, and all the reasons to execute them. Live bi-weekly strategy webinars like this one with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you could consume in a lifetime, and access to a 14-year database on investment ideas. I'll even give you a tip on a great surfing school in North Africa. Warning, it's a lot harder than it looks. I think I broke my nose a few minutes after we took that picture. This is a one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. With this, you get my Global Trading Dispatch in your inbox every morning. You also get Mad Hedge Hot Tips showing the 5 most important things that happened today and what to do about them. This is what I'm not going to charge for my service. I'm not going to charge $100,000. And that's what I charge my big hedge fund clients. And they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number. And I'm not going to charge $3,000. That's the cheapest site for this service on our website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it cost me millions more. Here's the offer you can't refuse. 6 months for just $997. That's a 66% discount to our regular price. It's a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top door trader. Let me make the money for you to pay for your subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Here's the offer you can't refuse. Just 6 months for just $997. Buy now and you'll instantly receive a trade alert with a very high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 95% of these trade alerts make money immediately. So I'll even give you a tease here. This is the chart for the trade alert that I'm going to send you as soon as you buy the service. What I'm not going to tell you is if this is a buy or sell. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. This is my friend Peter in England, who does the maintenance on the Spitfire. And let's go flying again, and I'll tell you the story about it. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in this spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter. Peter was a poorly paid pilot for Ryanair when he first signed up for my Global Trading Dispatch. After double his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft today, which are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles an hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it, This particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wing overs, careful never to exceed the 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. 6 months for just $997. Here is the link that'll take you to the sales page. We just had William from Billings, Montana sign up for the service. Thank you very much, William. Please check your inbox. The trade alert should be in the box, and the underlying stock is having a great day. We just got Nigel from Hong Kong just signed up. Thank you very much, Nigel. And if you can't find the trade alert in your inbox, please check in your junk folder. If you don't have our email address in your address book, sometimes it will go to junk. We also had Eric from Flagstaff, Arizona come in. Eric, and I can see right now we're going to hit our 25 limitation pretty soon. So if you're sitting on the fence just thinking of buying, act now, because the store shuts off the second we hit a sale of 25. Look forward to working with you all in the future.